Today is Tuesday, June 7th, and this is a post-market review. You are looking at a heat map of the market activities today. It was a red day across the board, specifically in the airlines, travel, hotels, and the consumer cyclicals. There were a few green spots in Walmart, Tesla, Shopify, and Square, but it was a reversal day. It was a red day nonetheless. It was a build-up on what we saw yesterday of the VIX sending another warning signal. Yesterday, stocks closed in the green. So did the VIX. Today, the VIX starts in the lower side in the morning, in the red, but it closes in the green again. The only difference here is stocks closed in the red. So we're now seeing the development of the VIX warning. The logical conclusion from today's activities is that we're going to see a continuation in the days to come of the VIX continuing to move to the upside while equities continue to sell off. As usual, we will start this video by reviewing the headlines that preceded the market's opening and the headlines that developed during the market, and then we're going to look at the technical analysis for market activities today. Lastly, we will discuss what to look for tomorrow's activities and the remainder of the week. Here's a headline in the morning from Evercore saying that the low prices in the VIX is a sign to encourage the bulls to continue to buy. Maybe it is a sign of complacency. Maybe it is a sign of euphoria and investors being reckless and irresponsible and not buying puts, not buying protection. Usually this is what precedes a market crash and a market correction. You don't see the VIX popping up before the correction. Usually investors become complacent and they don't buy protection, aka the VIX. So VIX prices go down and collapse before the correction and the crash. I see the VIX movement as a warning of greed in the market. Here's another headline from the Fed in Atlanta, pretty much throwing the towel, saying that economic activities might not return to normal, and they're recovering slower than expected. Another headline from the EU, they're forecasting economic activities down 8.3% for the year. This is the lowest since the Great War. Here are some headlines from the airline industry. United Airlines warning of lower bookings and furloughs. We also have another headline of a request from airlines for a new bailout in the tune of $32 billion, additionally of what they already received. How long are we going to prop these companies? How long are we going to continue to prop these zombie companies? Because pouring more money at the problem is not going to solve it. You can continue to give them more money in terms of debts and bailout. But at the end of the day, if there are lower bookings, if travelers are not traveling, there is no revenue. Again, debt does not substitute for revenue. When will the Fed and the government get that through their heads? Another headline from Hawaiian Airlines, 14 flight attendants tested positive for COVID. Very bad news for the airlines. It doesn't give customers any certainty that they will be safe in the airplane. Speaking of COVID, here is Dr. Fauci sounding like he's throwing the towel as well, saying that we are knee-deep in the first wave. We haven't even entered the second wave yet. There are also news that developed today, about an hour or so, about the virus being airborne. I don't have any details about that, but this is the headline that I saw. Certainly, if it is verified, that will be bad news for the economy because it makes more activities unsafe to practice. Moving on to the market's activities during the day, here's a chart of the SPY tracking the S&P 500. And you can see here, this is how we closed the day. It looks like a reversal. We couldn't even close the gap right here. We went all the way to the upside and reversed by the market's closing. Here's a 15 minutes chart. We started the activities right about here It was a gap down, but it was bought by the dip crowd, and we went to the upside, stopped. We couldn't surpass the highs from yesterday. We sold off, and then at the end we sold off more, and we closed pretty bad here. Here's a chart of the QQQ tracking the Nasdaq. Again, similar look for reversal here. If we take a look at the 15 minutes chart, again, we started the market's activities right around here, immediately got bought, and we reached the peak by lunchtime, and the sell-off continued all the way to the end of the day. Here is a tweet I released earlier in the day warning from buying the dip in the garbage stocks. We know what they are: airlines, casinos, hotels, banks. Just avoid these names because all the pops are being shorted and sold. So here it is. Let me show you an example here in Wynn Resorts. This is one of the names that I attached to my tweet. Here is the dip. It got bought by certain people and they get slaughtered as expected. Again, do not buy the dips in these names. Not a good idea. It's financial suicide at this point. Here's a tweet reminding you that before the beginning of the week, I told you that as Tesla and Apple go, so will the market. The reason why is the momentum is behind these stocks right now. Apple and Tesla have the majority of the momentum of the market. If they reverse, it is good night for the market. Here's Apple's chart from 15 minutes perspective. Again, buying at the beginning, consolidation, and by lunchtime we started selling off and we sold a lot by the end. This is not a good look for Apple. Let's look at it from a daily perspective. Here it is. Apple looking like it is reversing. Let's check on Tesla. Here is Tesla. Daily chart. We see the pin look right here, which is probably a sign for a sell-off tomorrow because the stock got bought, then got sold, and it pretty much stopped where it started in the beginning of the day. There's a little bit of indecisiveness here, but Tesla would not be able to just be the shining star while the market is selling off. Tesla will lead the sell-off when it happens due to the massive accumulation of buyers in the last few days. Here is a 15 minutes chart for Tesla. Now, unlike Apple, Tesla actually closed in the green. It went to the red in the beginning. It got bought and then reversed, dipped into the red. However, there was more buying appetite here. They bought it a little bit and it closed pretty much flat at the end of the day. However, Tesla did not close in the red. That is significant because it shows you that the appetite for buying in Tesla is still there. However, the appetite for buying is getting weaker and weaker, signaling a very good chance of reversal by this week. This is the most important chart of the day. We talked about the pin here yesterday, the reversal when the VIX went all the way to the blue line and reversed and closed in the green. Today, again, sold off. However, it came back by the end of the day and closed even stronger in the green. The VIX was up 5.33%. Now, what does that mean? It means that a lot of investors, the smart ones, are shifting their bets from long to short. They're buying protection in the SPY. They're buying the VIX. Whether they're selling their stocks or not, they're buying protection. So a sign of a reversal in the stock market is becoming clearer, and the reversal is very imminent right now. So here's what to look forward to. This is a chart of the futures, the ES futures that track the S&P 500, and you can see the reversal that we had today. We went all the way up and reversed and closed in the red. Here's the thing that you have to keep in mind. What will it take to rescue the market? If you're betting to the upside, if you're not believing the VIX warning signal, and you believe that stocks will continue to go up, what will be the trigger, the spark? Vaccine headlines, they already released one today. Fed's liquidity, well, you saw the Fed, the Atlanta Fed, throwing the towel pretty much and telling you that we see the economic activities continuing to recover at a lower rate than we expected. Okay, what else? Is it going to be another government stimulus? Perhaps that could do it. But we're running out of sources of fuel for the rally. The longer we hang out, we don't have buyers pushing the market higher from this consolidation range, the more likely that sellers will take control of the market and they will say, all right, time to book profits, let's get out. And you will see a sharp move to the downside. We're getting very, very close to that decision. Another warning signal, today was not a rotation day. It wasn't that the airlines and the hotels and the cyclicals were down and technology was up. It certainly was at the beginning of the day. But at the end of the day, all of these sectors closed in the red. It wasn't a rotation day like you've seen in usual prior red days along this recovery leg. You've seen rotations where the Nasdaq is down, but the Dow is up. And then you see another day where the Dow is down and the Nasdaq is up. Technology names are up. This was a little different. The VIX reversed, closed in the green, and all sectors pretty much closed in the red. This is another signal to be wary of. The market activities today remind me of the scene from Bronx Tale, the movie, when the mafia boss confront the motorcycles and tell them you gotta leave. And they mock and ridicule him, so he closes the door and says, oh, now you just can't leave. And I posted that scene on Twitter. You can check it out. This is what the VIX pretty much said to the market yesterday. It said, hey, this is a warning signal. I closed in the green. Even though you guys are still in the bar, you're still closed in the green too, the stocks. Today is different. Today I'm giving you another opportunity to leave the market.
Now you just can't leave.
Those greedy pigs who are not taking profits, and they believe that stocks go up, stonks, they will get slaughtered. They had a warning, and they had another opportunity to get out of the market, and they're not doing it. So expect them to go out in a panic. They will only go out when the market sell off strongly and significantly. And that usually accelerates the move to the downside. We're about to see a red bloodbath coming very soon in the stock market.